Millennials, Generation Y, Generation Me. Just some of the more generous tags to describe those born between 1980 and 2000. Regardless of the tag, the inequalities facing this group has recently come into sharp focus and is attracting strong debate. Whether it's an absence of financial knowledge, low pay growth, soaring house costs, or debt levels, the trends impacting millennials make them particularly prone to financial stress, which is bad for them and certainly bad for you. I'm Tim Perkins, co-founder and director at Nudge. I'm delighted to be hosting this webinar today. I was born in 1978, so I'm almost a millennial. And in overseeing Nudge, 53% of our Nudge community, that's the employees of our clients, are millennials, and we've certainly learned a lot from them over the last few years. Delighted to welcome here also Jenny Davidson. Welcome, Jenny.
Thank you.
If you could give us a quick introduction to yourself.
Yes, yeah, well, I'm definitely not a millennial, I'm afraid, born a bit too early. So I oversee reward at Three. Just recently changed our job titles at Three, really, to make them more meaningful to our people.
Okay.
So I'm now Director of People Propositions. So a little bit like customer propositions, look after all the propositions that we offer our people.
Excellent. That makes a lot of sense. And I guess the third party here today is Nudgeonomics. So for those of you who've joined previous webinars, you'll be familiar with Nudgeonomics. For those who haven't, Nudgeonomics is our insight and analysis. So throughout today's session, we'll be referring to some of the stats from Nudgeonomics. If you've got any questions, please use the panel to submit those, and we will follow up with those afterwards. And we're hoping for this to last about 20 minutes, so lots to cover. We'll see how we get on. Now, a very quick overview of who we are. I know a lot of people on the webinar already know who we are, but for those who don't, as an organization, the reason we exist is the fact that the world of finance is increasingly complicated, and that's what this tangled knot represents. Money's complicated. As a result, people are making mistakes, they're missing opportunities. So for example, and I'm sure will come up later today, the LISA, the lifetime ISA, brilliant product available for under 40s, but only 2% of people who are eligible for it are claiming it. So what do we do as an organization? Although we're known as a financial education provider, when it comes to employees, we're all about making money simpler. And that's such a universal statement, whether you're moving out of home or you are a parent of young children, or you're later on in life trying to plan more complex financial matters, you can rely on Nudge to make money simpler. So who are millennials? What are millennials? And a person reaching young adulthood in the early 21st century, it's obviously a very big group. Lumping together everybody from 18 to 38 is potentially quite dangerous. But they're a very, very important group of people. They do have, I should say, received some bad press in terms of culturally, perhaps some of the ways that that they work and carry themselves. But there are some amazing examples of people who are really moving the world forward. So whether it's Murray Black, the youngest MP voted in at just 21, or Malala, the youngest winner of a Nobel Peace Prize. We've got Prince Harry, obviously in the news recently. So yeah, a very interesting group of people. Jenny, in terms of millennials at Three, what does that look like?
We have a lot of them, actually. So our average age in the organisation overall is 32.
That makes me feel old.
Yeah. And 54% of our overall population are millennials. Obviously, we're a retail organisation. So if you look at the retail population only, our average age in retail is 27. Right. We have 62% of our staff are millennials. And actually, we've got an increasing number of people at Generation Z now. So those sort of age 18 and younger. So 22% of our people in retail are age 18 or younger.
Fascinating. So well qualified to talk today then. In terms of, I guess, what has brought this to the table, a few things have happened that have triggered this session, a few recipes, a few ingredients to the recipe. So first, government interventions. There's been lots happening here. The cynic in me describes it as political play, but we've seen stamp duty cut for first-time buyers. We've seen an increase in the repayment income threshold on student loans, and of course there's a wider review on student financing. The think tank, the Resolution Foundation, not sure if you saw this, but they made an interesting proposal earlier this year, which was proposing that youngsters received a one-off 10 grand gift, I guess, for want of a better phrase. And meanwhile, that was funded through national insurance being levied on pensioners. We've seen house prices going up. We've seen auto enrolment contribution increases going up, which is largely going to be impacting those younger millennials. So yeah, lots happening. And I guess that raises the question for me, Jenny, particularly around auto enrolment. What's your millennial interaction with benefits and specifically pensions been at Three?
Yeah, just pick up on the pensions piece and automatic enrolment first.
Yeah.
So obviously we have had an increase in our automatic enrolment rates from April. Mm-hmm. We haven't actually seen a mass run to opt out.
Okay.
Obviously, I think it's a little bit too early to see. And so therefore we're going to monitor it over the next 12 months just to see if we do have an increase in opt-out rates. But certainly not a lot of noise around the rates going up. We have communicated it really well. So okay. We started communicating probably about October time last year, mm-hmm. and then sent another reminder out in March to remind people that they will see an increased pension contribution coming out of their pay for April.
Yeah.
And we did actually take that into account when we decided how much our pay review was going to be this year, about the knock-on impact of increasing pension contributions on pay for our lowest paid people.
Yeah, okay, interesting. And I guess as well as those macro levels, thinking about this purely from the way that we see the world, so from a nudge product perspective, I guess we've had 3 chapters in our evolution. So back in 2014, we were delivering nudges in line with legislative change. So when something happens that impacts your money, you got a nudge, and that was typically to your work email. We then developed a platform that allowed people to tailor their dreams and goals, so allow people to better understand getting on the housing ladder, paying off student loan, those types of things. And then earlier this year we redeveloped the platform very much with millennials in mind, and it was built around this idea of there being a feed, so a very familiar look and feel that particularly millennials are used to working with from a product perspective. Lots of posts, so the idea being that when something happens there's a post, and that means you get a different experience every time. Quite light on detail, but there's the ability for people to find out more. I don't know, has that extended to the way that you communicate your benefits, particularly to millennials, Jenny?
It definitely has. So we're seeing that it really needs to be mobile first.
Yeah.
So the benefits we've introduced recently have been very app based.
Okay.
So things like Taste Card, Digital GP, we've actually done an app based type benefits. So definitely mobile first. Our retail staff in particular really engage with Facebook. So they have their own Facebook group.
Yeah.
We use that as a mechanism to communicate, and also sort of quick videos. They like really sort of snapshot in the moment type communication.
Yeah, I guess if you're working in a shop in particular,
not much time to look at these things. It needs to be quick and interactive.
Yeah.
But also we see that the people engage more with their benefits if they can see it on Facebook, and you see lots of examples of retail staff quoting what they've been using and their benefits for.
Okay, fantastic. The other thing that we focused on with millennials in mind was the ability for people to share. So all of the financial education that people receive, they can share, whether that's with colleagues or family or others. And on the right hand side, that represents the element of our service where we're providing people with personalized nudges. So when something particularly noteworthy happens, you'll get it as a nudge. And we launched the ability for people to receive those nudges via WhatsApp. And so what I did in preparation for this is looked at a comparison period. So 3 months before activity from Nudgeonomics, 3 months before the new platform and 3 months after. And it was fascinating to see how the take up from millennials had changed. So mobile use went up significantly, that sharing of articles, WhatsApp, changing interests. So yeah, we've tailored the comms for the millennials, and it sounds like you're doing something similar at Three, Jenny.
Yes, yeah. We've just introduced Retail Live, which is a weekly broadcast where our retail director sort of broadcasts the latest, and we get the opportunity to go and help broadcast and sit on the sofa and answer questions around the benefits. And we particularly did that last week with Mental Health Awareness Week.
Okay, fantastic. Now, the foundation for financial education that we provide for our clients' employees, we use this concept of interest, so that we divide the world of finance into 24 areas of interest, which you can see here. Some of them are probably more easier to decipher than others, but covering everything from avoiding scams, care and support, employment, divorce and separation, getting on the housing ladder, holidays, students and graduates. So bit of interactivity for you. Put you on the spot, Jenny.
Okay.
If we were to break a population down into two very large crude groups, but millennials and the rest of us, what would you expect those areas of interest to be? What would you expect a chart to look like?
Well, I guess we've got a little bit of insight into this at Three, because we held a focus group actually only last week, where we got representatives from each retail area, and also every function of head office was represented. And we asked them some questions around what worries them most about their financial position. And what came up probably was the biggest thing was house purchase. So how do we get onto the housing ladder? I think we kind of expected that. The second thing was around job security, and if suddenly they found themselves without a job, would they have enough savings to be able to survive for a period of time? But the one that threw us a bit left field was they were talking about if they or their partner were to die, what would happen? So sort of some concerns around surviving on one income if the partner dies, and also what happens to my money, and inheritance concerns coming out as well. So that probably wasn't what I was expecting. So I would say from a Three perspective, sort of short-term savings, house purchase, and then inheritance.
Okay, well, let's reveal. So what this chart shows is the top interests for the different groups. So the rest of us, the most popular thing that people were learning about over that 3-month period was pensions, investing, and life after work. And then from a millennial perspective, budgeting, mortgages and investing, with credit rating closely behind that. So I think a couple of call outs here. Unsurprising to see mortgages, and we'll talk more about that in a moment. It was interesting on investing. I didn't necessarily expect to see such high engagement from millennials around investing. So when we next looked at the next level of detail, what was interesting is where the rest of us, in inverted commas, are looking at investing, it is around we already have investments, whereas what we found from the millennials is it was a more aspirational thing, and a big trigger there was the LISA, the lifetime ISA. So there's a type of ISA that people can use to invest in as long as they're under 40, that allows them to save towards retirement or home, whichever comes first. We also have a concept of dreams and goals. So dream and goal is where we provide step-by-step guidance, helping people with aspirational life ambitions, and front and center, and again supporting the nudgeonomics evidence and what you saw yourself in the focus group. Getting on the housing ladder comes out loud and clear as the biggest goal that millennials have, followed by paying off debt and saving for a holiday. What was interesting on the getting on the housing ladder, the interest is going up as it's becoming harder. Some research here from the Family Resources Survey that showed that between 2006 and 2016, the proportion of 25 to 34-year-olds renting almost doubled. So it went up from 35% to almost 70%. So it's becoming increasingly difficult. Meanwhile, debt. So research from the Institute of Fiscal Studies, average debt £50,000. It's starting employment with that round your neck doesn't make things easy. It was interesting then also on saving for a holiday. So of the 24 possible things that people could have been learning about, I was interested to see saving for a holiday there. And it reminded me of an article I read on the BBC website earlier this week. I don't know if you saw it, about how 1830 holidays are not perhaps doing as well as they had 15, 20 years ago. And one of the arguments there was that millennials, the youngsters, were more interested in an experience, something that they could post on Instagram.
We've actually seen that at Three, from the customer side as well as from the people side. So we've done some recent customer research, which has really shown that that this group of people, they really want to remember these experiences, and that sort of fits in with the growth of the social media channels, really. And when they go on holiday or go to a concert, it's all about sort of recording that and sharing their experiences with other people. So we've noticed that from a mobile use from a customer perspective as well as from a people perspective.
Interesting. So I think from a reward perspective, so the Nudgeonomics shows that interests and aspirations is different for millennials. What do you think appropriate reward design is for millennials? How do you think benefits should differ for millennials?
I think a couple of things that have come out of some of the work we've done at Three is that what really motivates the millennials to engage with their benefits is not just the traditional benefits. So things like time off, flexibility come out loud and clear every time that we ask what they would be interested in, and all of the things we offer around wellness, including financial wellness, is really important. I think the other thing I would say is that I wouldn't rush out and change my reward program. I think it's trying to find out, by offering maybe financial education across the board, to try and find out what people really want. There's lots of different initiatives in the industry at the moment. Everything from yoga classes through to loan consolidation, and you could rush out and offer loads of the different things, and they're not actually really be what people want. So I think offering sort of a broad financial education for everyone first, and then maybe offering some particular products off of the back of that would be a good idea.
I mean, and what's interesting for me is somewhat mismatch. So, for example, we can see that housing and getting on the housing ladder is an interest and it's a dream and goal. But meanwhile, as I think I alluded to at the beginning, less than 2% of eligible people are taking that up. So do you think there's a challenge with millennials of, we know what the problem is, there's a solution, a benefit available. Is there a mismatch in them taking that up, engaging with the benefits?
Well, we certainly don't have any issues with engagement and benefits at Three. So we've just recently done an employee survey, and that's shown quite a significant increase in the question we ask around, does Three offer the benefits that you need to suit your lifestyle? So that was a big improvement. I think it's they perhaps don't really know what's out there. So if we can offer them sort of financial education around sort of solutions and tools and support that's out there, then I think they'll engage even more.
You don't know what you don't know, do you?
Exactly.
That's the problem. So I think on the subject of home, it's obviously a big one for millennials, and thought it was worth looking at what some other organisations, including some of our clients, are doing. So house deposit schemes, not sure if you've heard of this, but Simply Health offer a first home scheme where employees can put 3 to 6% of their basic salary into a savings account, which is then matched by the business, which sounds very generous to me. One of our clients, Samsung, they were talking in a session we did last year about how they allow people to redirect pension contributions into an ISA, which can subsequently obviously be used to help save for a life-changing event like buying a home. They also offer mortgage sessions as well to support people around that. Another one of our clients, Aspen, they let employees redirect their flex fund into debt, ISAs or share save, and of course financial education is key to make sure people are making a sustained decisions there. We did a webinar a year or so ago where we talked about the investment firm Terra Firma, who are cutting salaries and cash bonuses for the first 5 years of a new employee's tenure, and instead redirecting the money into a pot for a housing deposit. So for some organizations, there's clearly a lot that they're doing. I think they all sound quite expensive to me. I think there's another set of options available. So one of our clients, UK Power Networks, they offer a tenancy deposit loan scheme to help people save up a deposit for renting. And we know that Deloitte had a scheme where people could get discounted rent if they moved to the East Village, was part of the Athletes Village from the Olympic Stadium. Penguin Random House have done some work. So yeah, it all harks back to Victorian philanthropy, I think, and this idea that your workplace is more than just a job. There's a role in the wider community. What's your view on that, Jenny? I mean, there will be some people potentially listening to this that might think that that's a step too far. What do you think?
I think, well, certainly at Three, we believe that wellness is really, really important, and people bringing their best to work is one of the mottos we have. And therefore, I think if there's anything you can do to improve the financial wellness of your staff, reduce financial stress, then perhaps, nothing's going a bit too far to do that. So it sounds like there's lots of innovation happening as well from some of your clients that you've mentioned.
Yeah, fantastic. So I think even if you can't provide some of those amazing benefits, there are other ways that you can help. I think just making sure that people are aware of LISA, for example, or mortgage brokerage services. I think what we're seeing is increasingly employers wanting to offer these benefits, but on a governance foundation. So make sure that employees are making sustained decisions and it's done in a risk-averse way. So one of our clients, for example, they have a fantastically named benefit, which is a Creating Lasting Happiness loan, which is where they're using their cash reserves to help people with life-changing events. And we're providing support to help people understand their options, jargon, and ultimately make balanced decisions. So yeah, in terms of the financial education and support that you feel people need, Jenny, any particular topics that you think come to mind?
Yeah, I think at the moment at Three, we've really been trying to help people's salary go a little bit further. So some of the things we offer around discounted voluntary benefits, we give all our employees taste cards so they can get money off when they're eating out or going to the cinema. Yeah. So anything we can do to actually help salary go a little bit further is what we're concentrating on. Yeah. And also really how to budget. So any budgeting tools is to help their salary package go further is what we've been concentrating on.
Yeah, the big one I hear a lot about as well is student loans. I mean, there's lots of change about student loans. I was with a group of employees just last week, enlightening them, if that's the right phrase, that their interest rate had gone up from 4.6% to 6.1% in September, going up again next September to 6.3%. So clearly there's a lot of education there that people need to know about in order to make the right decisions. I think the last bit that we just want to touch about is the role of parents. So the bank of mum and dad. Apparently 25% of mortgages are now underpinned by the bank of mum and dad, and that's a 30% increase year on year. I think it's probably down to the pension freedoms, thinking about it. But it's interesting because I think that there's two elements to this. Number one is educating the millennials about how their parents could help. And then separately, there's educating parents about their millennial children. And I remember an example we had earlier this year, actually. I'm not sure if you're aware of this, but when you get a power of attorney, there's an application fee, and it turned out the government were mischarging people between April 13 and March 17. People were paying too much. So we were sending out a nudge, some education around how you reclaim that fee if you've overpaid it. And there was a real debate internally about who's the audience for that. Should we be sending it to the older people who are potentially going to be subject to the power of attorney, or do we send it to the younger people, often millennials, who will be the power of attorney? So yeah, it's an interesting one, and I know you're son, Jenny, Scott.
Yeah.
He did work experience with a couple of years ago, so I know Scott. Be great to get your experience from a
mum's perspective. I can really relate to this, actually. Yeah, so Scott's just finishing his first year at Bristol, and I think the student loans, that's complete minefield.
Yeah.
And I don't think they realise, because the banks are now offering the students free interest-free overdrafts.
Yeah.
And so Scott's got his loan, he's taken out interest-free overdraft. I'm not sure he actually realises that someone's going to have to pay this back at some stage.
Yeah.
Also, he's just actually found his house for next year, so there's a group of them renting, and again, that's a complete minefield. The amount of fees that you have to pay to the landlords are really, 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 really high.
Yeah.
So I think I can relate to those completely.
Yeah, fantastic. So I think to wrap up then, hopefully in time, I think what is clear is that traditional benefits need to evolve as the workforce and millennials come into the business. And grow through the business. And I think the opportunity here is that millennials are more open to talking about money than perhaps other generations are. Money makes the world go round, and so financial education there's never been a greater opportunity to help people better understand their money and that have such an impact on their wider lives. Thank you very much for your time, Jenny.
It's a pleasure.
Absolute delight to spend the time with you, and looking forward to responding to some of the questions that might come in.